start Rise with India Primetime Hour, as always, with the Money Show, your one-stop shop for everything to do with your money, be it investing it, growing it, or even spending it. I'm Mubina Kapasi, and here's what we have lined up today. We often get income tax notices under Section 143(1). What exactly is a notice, and how should you file your return in a way for avoiding any receipts of income tax notice? That's what I'm going to be discussing today on the show. Get you your guide of avoiding tax filing mistakes. And of course, not to mention, now that the return filing date has been delayed from tomorrow to straight 1 month later, what does it mean for you? Also, we will be talking about the spending habits of the working professional aged 25 to 45. A large number of our viewers, of course, do fall in that category. This is one interesting topic that you do not want to miss, because you will know whether you fall in this or you are an outlier and need to change your spending or saving habits. This is what we have lined up today on the Money Show. But before we get you headlines or start the first topic, a quick look at the Axis Bank management on the first quarter numbers.
These segments, we are not seeing risk ratios be materially different from what we have seen over the last 2 years. The lines look pretty stable right now. So right now, not an area of big concern that we are worried about.
I mean, we are cautious. I do want to emphasize that we are watching it closely, but the line is not moving for us. I know others have been talking about the movements in their lines, but for us it has not moved. I would also like to add that apart from, obviously calling some sectors as stressed last quarter, I just want to clarify on the retail side, as far as unsecured book is concerned, we normally, we make provisions at the end of 90 days past due, we make full provisions, and at the end of 180 days, we write them off. So we are relatively quite conservative as far as our retail book is concerned. So just because you'll ask, I just want to clarify upfront.
There haven't been any chunky recoveries during the course of this quarter.
So are you still expecting how much in the next carry forward?
It's very hard to say. If you know something more about the resolution process, you can let us know. We don't have line of sight to timing right now. The process is going on. It is progressing slowly, but steadily. So we will need to continue to watch.
The fact that the government has done such a great job of, coming out with clarifications and passing the bill that quickly, I've seen it after a long time, I think just bodes well for the sector in terms of getting more resolutions in place. But as Jaram said, we have no line of sight. Faster it comes, good for us, but we're not waiting for it to run our business.
Sir, on account specific, one question, do you have exposure with CCP?
We can't make account specific conversations on the media call, sorry.
This 459 crores of additional provision you've taken because you want to be conservative. Could you tell us these non-NPA stressed accounts, are you talking about the exposure in BB and below? Is this outside?
So the 459 crores that you're referring to is towards non-fund-based facilities, both in our NPA pool and in our BB and below pool. So RBI's IRAC norms ask you to make provisions on fund-based facilities, but there are no norms around non-fund-based facilities. We have
It was not that great a set. We had Enna and Pat that came in, slightly below expectations. The NPAs, however, managed to stay a bit stable. But all in all, it was not that great a set of numbers. Of course, it came out just at the fag end of the market. Okay, important flashes appearing on your screens. Café Coffee Day has said that VH Siddhartha has written to the board and the employees. The board had an emergency meeting today and they are confident of business continuity, which the management will ensure will take forward. They are currently reviewing the copy of the letter, which they still claim has allegedly been signed by VH Siddhartha. This is the first time that the company is actually properly acknowledging the receipt of the letter. Remember that earlier they did say that they doubted the veracity of the letter. But now they are saying that they have received the letter, which they believe has been allegedly signed by VH Siddhartha. He says, of course, in that letter that the intention was never to mislead anybody. He also points the finger on, an ex-DG of the income tax department, and also, of course, on a particular private equity player that had been forcing him to, to take part in the buyback. All of this is something that caused him to believe that he was responsible for the failure to create a profitable model. And now we have Café Coffee Day board saying that VG Siddhartha has written to the board of directors and the employees. They are going to talk about business continuity, and they are confident of being able to take forward operations despite the very sad incident that has taken place. VG Siddhartha missing since Monday evening. As you can see on your screens and the visuals that are appearing, the area from where he allegedly went missing, the search is still on, and the Karnataka police are all hands on deck, and they are searching vociferously for Mr. VG Siddhartha, who is missing. It is too early to rule out any other incident that may have happened with Mr. Siddhartha at this point. Okay, well, those were the top news headlines of this hour. But like I promised, we are going to be discussing income tax. And while many of you may be just in the midst of filing your income tax returns, it's important to do so in a manner that will not lead to the income tax department sending you a notice and you having to go through the entire hassle of going and visiting your income tax officer at your ward. And of course, it starts with filing your income tax in the proper manner. To discuss that, we have with us Amarpal Chadda, a partner for People Advisory Services with EY. Mr. Chadda, thank you then for joining in on ET Now. And you know, this is something that all of us fear. Looking at that income tax notice via post, or in fact now of course it's all digital, so via email. This is something that we all dread receiving. And of course to safeguard ourselves from that, I think it starts from point A, and that is filing your income tax return. So let's start by understanding what are the most common mistakes that people may make while filing their returns that could lead to a notice coming from the income tax department.
Yeah, sure. So typically when you're doing your tax return, it's almost the 9th hour. So people are just collating stuff at the last moment and putting things together. But if you see now, you have a month. If you've not already filed your tax return, it's time, you have another month to do it. So my suggestion is that if you want to avoid receiving notices from the tax office, there are a few basic principles that you need to follow. One, do reconcile your income sources. So it's good to look at what all income is captured in your Form 26AS, which you can download from the government website. In addition, look at what's appearing. If you're a salaried employee, look at what's appearing in your Form 16. Also look at income sources which would otherwise not have been captured. For example, a saving bank interest, or certain income that need to be clubbed with you, income which would have been transferred to your spouse or to your child. So collate all of that income at one place and see what is exempt. Have you made the right investment on the right time? For example, if you're claiming a deduction for ATC, have you put your money into the PPF, EPF, housing loan? Have you collated all those details? For every investment for which you claim a deduction, it's important that you have proofs in place. So put all of this together, create a file for yourself. We may be as digital, so you could create a digital file for yourself. Put all your records into a digital locker and then complete your tax return either through a tax calculation which you recheck, because if you do everything right but don't compute the right tax, you will still end up getting a tax notice. So please keep these basic things in mind when you are starting or closing your tax return.
Disclosure of all incomes and the sources, etc., is the first step, of course, to ensuring that you have filed your return in a clean manner. And of course, it will save even the income tax department a lot of hassle for them having to send you a notice and then taking forward the procedure from there. But you know, very importantly, Mr. Chadda, we also have had the last date of the income tax return that has been delayed now to the 31st of August. What does it mean then for viewers? I mean, like you mentioned, you know, we usually wait till the 9th hour. I mean, if it's 31st August, we'll start filing our return 31st August morning. So it's a very wrong practice. But yeah, now that we've got this bumper 1 month extra, what does it mean for, you know, people who want to file their income tax returns?
A good question. So I think old habits die hard. So it's definitely time to relook, and by the department bringing in a plenty of 5,000, we have seen a behavioral change anyway. So we've seen people filing their tax returns on time. Now, given that you have 30 days more, I would suggest, even if you've done your tax return, for a moment forget that you've done your tax return. Just pull all your records and see, do you have a file that not only you, but in case of a problem, somebody else can refer to and reconcile your income. Because remember that you may file your tax return, you may not remember, there may be an issue with you, but somebody in the family should know how your tax return has been prepared. So that if there is a notice, not now, 6 months, 12 months down the line, somebody can just pull that notice together and reconcile your income. So I would suggest use this time to look back and get your records in shape.
Okay, well, yes, do not wait till the 9th hour. Ensure that you use this time to properly collate all your income. You have the Form 26AS as well, from which you can compare with, and then file your income tax return. It just makes life much more simple. Okay, well, we are going to kickstart our Ask the Money Show segment. So we'll keep our phone lines open, and of course, our phone number as well as our email address remains the same. It's appearing on the top of your screens, themoneyshow@etnow.tv, or you can call in right now, 24990388. That's 24990388. Call in, and it's a golden opportunity to get your tax-related questions and queries answered by a partner at EY. For now, I'm going to take up some viewer queries that we have received. First up, we have Mr. Neeraj Kumar, who has sent in a question. It's via an email. Now, he says that I changed my job and opted annuity for the superannuation amount that I was entitled for, and now I get the amount monthly, and I see that this amount is seen in my Form 26AS. Now his question is, do I need to pay tax on that amount? I am currently working in another company and I fall under the highest tax bracket. Mr. Chadha, how would you recommend he go about with his question?
Sure. So if you're receiving an annuity from, for example, a superannuation or a NPS withdrawal, you are getting an annuity on a monthly basis. That annuity is taxable as income in your hands. So you need to include that in your taxable income and provide that. And that's one reason why you may be seeing it in 26AS also. You need to include that in your taxable income every year.
Okay, welcome back. You're watching The Money Show. So now, without any further ado, let's bring on board our second question of the day. And this one is coming in from Somil Bajpai. Now, Somil asks, do I have to pay income tax on a loan taken from parents? Is this loan considered as an income? Very interesting question, Mr. Chadha. Very often we get a loan from our parents. Sometimes it's called a gift, but of course, in this case, he's properly terming it as a loan, which means he has intent to pay it back sooner or later. How exactly then, Mr. Chadha, should this be shown in your income tax return? And also, will Somil have to pay any tax on it?
I think a very nice question. So good that Somil, you realize that there could be also a situation where you need to repay the money back to your parents. So a good situation, but fortunately you have a positive answer to this. A loan that you receive from your parents is not your income. It's a loan. You have borrowed money and you're going to return that money to your parents. So in no circumstances it converts into income for you. Even if they were to gift you money, a gift between relatives is a gift, it is not income. So under both the situations, it's not income for you.
Okay, not an income, so you do not have to pay taxes. And of course, even if it's a gift, let's say if you don't pay your parents later, it would still not be taxable because a gift from your relative is not considered as an income for you. Of course, if there's any interest paid to your parents on this loan, then it would be an income for them. Okay, let's move on and bring on board then our third question, and that is also on taxation. In fact, that will come up for you on your screens in just a bit. We do have Sheetal, who has sent in a question. She says that I have received an income tax notice from the department stating that there is a mismatch in taxes reflected in the Form 26AS and my tax return. What should I do to avoid this situation? Mr. Chadha, precisely something that we were discussing earlier about how essentially you must ensure that when you're filing your return itself, ensure that you rectify any mismatches. So how would you, help Sheetal out?
Sure. And Sheetal, this is only a starting trend. In one of the last shows with Mubina, we mentioned that as the government goes digital, the expectation is that the records match exactly. So if there is an income that is reflecting in the government accounts through the Form 26AS, if you do not match that exactly with your tax return, an automated tax notice will come your way. So it's become important. While we are going digital fully, you need to track all the income sources well, download the Form 26AS before filing your tax return. And even if you received a tax notice, nothing to worry, it's a simple inquiry. You need to go back, look at your records. If there is income that you've missed, correct it, inform the tax authorities immediately. You are still within the time to revise your tax return, do revise the tax return. So you need to respond to notices, but again, rule number one, get your tax records in place, because with most of the people, when they get a tax notice, the panic is because one, I don't know where my records are. I have my bank statement, I don't know what these debit credits that are appearing in my bank statement are. All our memories are pretty weak with all these online transactions happening. We are not able to keep track of what we spent and what we received into our accounts. So very critical, get your accounts in a good shape, have your bank statements with all high value items singled out and mention. You could scribble it down saying this is what the income was for, or this is the high value expense you incurred.
Okay, that of course is what Mr. Chadha is recommending you could go about with this. No need to panic, of course. You've received the income tax notice. Our officers as well are pretty rational, and they will mostly empathize with your situation on what exactly has happened. And of course, this is going to be only a temporary problem. Like Mr. Chadha as well said, with everything going digital and you should not have to worry about such mismatches. Okay, let's continue then and answer some more questions and queries. We have Anurag Anand who has sent in a question that should appear for you on your screens. Anurag asks, I have made some I have made some fixed deposits in my husband's name. So let's call her Mrs. Anurag Anand. She may have probably used her husband's email address. She wants to know, should I be disclosing the interest on this in my income tax return? Again, a very interesting question. You make certain FDs on behalf of your relatives, your husband, your child. So how exactly should you disclose this in your income tax return? Mr. Chadha, what advice would you give her?
So since you've done an FD in your husband's name, it's purely your income which is now being categorized or nomenclated as your husband's income, but it needs to be reported in your tax return. In the income tax laws provide for clubbing of income. So if you do not transfer the source of the income, for example, you've not gifted this money to your husband. This is your money. Only thing, while investing, you've done a fixed deposit in name of your husband. This income continues to be taxable in your hand. So please report it in your books. The only challenge here would be that this income, the interest would have got credited to your husband's bank account. Unless you have a joint bank account, then it's easier. But if you have a separate bank account, then your husband needs to ensure that he's not reporting the same income, and you report it as income which is to be clubbed with you, because you've only transferred the interest from this income. The source is still in your name.
I hope you have taken note of that. In fact, for everybody who may have made FD investments on behalf of your relative, this is the SOP to follow. Okay, we have Amlan Majumdar from Kolkata who has sent in a question. Hi, Mr. Majumdar. Good evening, and thank you for calling in on the Money Show. What's your query?
Hi, good evening. I have a question. The dividend received from equity mutual funds, is it taxable in my hands as assessee? Dividend received from equity mutual funds.
Okay.
Is in my hand as assessee.
Okay, equity mutual fund dividend that has been received, is it taxable? Mr. Chadha, of course, this is something that has been a topic of contention. We have had tax on dividend as well that was increased. Or rather that was introduced if you receive dividend above a certain amount. But whether equity mutual fund dividend is included in that, how would you help Mr. Majumdar out?
So, Mr. Majumdar, any dividend that you receive from equity/equity oriented funds is exempt up to 10 lakhs. So, if you receive more than 10 lakhs as dividend, then it is taxable in your hands. But up to 10 lakhs, you could enjoy the benefit of the dividends received from any equity to be exempt in your hands.
I hope that has helped you answer your question, Mr. Mazumdar. And on that note, Mr. Chadha, we'll let you go at that. Thank you so much then for joining in and very patiently waiting by while we'll go through all that breaking news and, of course, Hero MotoCorp's numbers and answering our questions and queries from viewers. Like I said, folks, yes, the Income Tax Department has given all of us a big breather by giving us another month extra. So now 31st August will be the last day to file your income tax returns and not 31st July. But that does not mean you kick back your boots and relax, because do remember that filing a return at the 9th hour, like Mr. Chadha pointed out, does lead to mistakes, and that is something that you have to avoid, or you could be having a notice from the Income Tax Department, and that procedure could turn out to be a bit tedious to follow. Of course, we on The Money Show will keep getting you all the updates on income tax filing, so continue staying tuned to the show. We'll do one thing, we'll take a very quick break right here on the show. Do come right back for more interesting updates on taxation. Okay, we'll just have to interrupt The Money Show, as we do have some more very, very important news trickling in with respect to the case of Mr. VH Siddhartha, the Café Coffee Day owner, who has gone missing since last Monday evening. And now the IT department says that the authenticity of the note is still not known, because they believe that the signature as per the letter from Mr. VH Siddhartha does not match as has been signed by him in the annual reports. This is really big, because it certainly seems to be unearthing a totally different kind of a conspiracy, almost movie-esque like. And now the mystery has only deepened about his disappearance. In fact, the taxman is also saying that the probe was connected to a case against a political leader. So certainly things seem to be getting murkier and murkier. Rahul Dayama joins us now, and Rahul, even the Café Coffee Day board in their latest statement said that yes, we have received this letter which has allegedly been signed by Mr. VH Siddhartha, and now of course you have the taxman believing that it does not look like the signatures match, almost like a Bollywood or a Hollywood movie script.
Yes, Mubina, remember the entire day shareholders, people across the country were waiting for the veracity of the letter that was heavily doing the rounds online. But CCB in an emergency board meet and post that has indicated that they have indeed received a letter from VH Siddhartha. They've reviewed a copy of the letter signed by him and shared it with relevant authorities. And they are really seeking assistance of local authorities going ahead. So they have confirmed that the letter has been in place. It is the same identical letters that has been doing the round from earlier this morning that talks about the harassment that he really faced from tax department when it comes to his stake in Mindtree. CCB also that was really blocked. Also, the particular player that he had mentioned. Going on, there is also an overall valuation of the entire set of businesses that CCD operates in, from vending machine. It also talks about a potential discussions that they are having with Coke and ITC as well. So yes, CCD, the company, they're really saying that they have received the letter and reviewed it. As you rightly pointed out, the IT department was quick to really step up and point out that they do doubt the authenticity of the letter. They are indicating this on the grounds that the signature of VH Siddhartha does not correspond with his signatures on the annual report. They have also gone on to sort of talk a lot more about the particular case, really, that also deals with a prominent political leader. They say that back really in 2017, and which of course has been widely reported by the media, close to 450 crores was what VH Siddhartha had admitted in terms of unaccounted income. So clearly, while the board will have a lot to answer, they are likely to meet tomorrow morning again around the veracity of the letter. IT department for now saying the letter does not seem authentic.
Okay, I think this is basically the department coming to their defense, because the letter clearly stated that he, Mr. Siddhartha did face some sort of harassment on account of, or rather from an ex-DG of the Income Tax Office. So I think this is basically the tax department defending themselves, because they are saying that this was in connection with a very prominent Karnataka political leader without taking any names. They've also said that Coffee Day Global has not paid SA tax or self-assessment tax of almost about 14-15 crores, if I'm not mistaken, and that Mr. Siddhartha admitted to undisclosed or unaccounted income in excess of 300 crore rupees. So Rahul, basically this is just the tax department coming to their defense, after this tell-all letter of sorts.
Yes, that's right, Mubina. Also, we have to see this in the context that the entire narrative today has really been built around entrepreneurs, business on shows, India Inc. reacting to the development, saying that the tax pressure or the tax harassment has really to stop as far as businesses are concerned. So the IT department has also been under pressure with the narrative sort of going against them right from the word go, since the letter sort of came out. They've also gone on to really indicate in the letter, let me highlight other important portions, that VG Siddhartha had then filed return of income and he did not offer the above undisclosed income. He had admitted it and also paid about 35 crores in his individual case as well. So the IT department giving a lot more clarity as far as the taxation case is concerned. They've also referred to the Mindtree stake sale that VG Siddhartha had indicated in the letter.
Okay, well, yes, since morning we've caught up with lots of reactions from India Inc., right from, Kiran Mazumdar's show to, in fact, even a co-founder of Infosys, who even went as far as to call the term tax terrorism. Ms. Shaw as well said about how taxation pressures certainly do tend to get to on the nerve of entrepreneurship, and that's really been the rhetoric or the narrative, like Rahul said, ever since this letter has been released. Two players, one is the P player and the other is of course the Income Tax Department. Significant pressure received from these two entities, and hence Mr. Siddhartha took this drastic step. Though at this point of time now, the IT department in their defense is completely doubting the veracity or the authenticity of this letter in the very first place, which means that Mr. Siddhartha's disappearance is now getting even more mysterious. We will of course keep getting you up to speed on this story as it develops, and it's certainly something that's keeping all of us at the edge of our seats. Okay, we'll go back to the Money Show, where we were talking about, well, as the term says, income tax and how to avoid getting an income tax notice. Coincidental, of course, that we are taking up this topic at a day like this when Mr. Siddhartha as well has been inundated with tax troubles of a totally different kind. Of course, we are going to be talking about some more simpler ones. And here is the jargon that we are going to simplify of the day. And as our topic is income tax assessment, summary assessment. This is something that we want to discuss. A very basic way of assessment by the Income Tax Office, where it's carried out without any human intervention. Basically, a simple match that the income tax officer does between various documents that are available to him, and of course what the assessee has disclosed in his or her income tax return. Just cross-checking the information, and this is all done online. At this point of time, the assessee does not need to go to the income tax officer to meet or any sort of a hearing, because it's just the income tax officer who's currently conducting this cross-check. And then of course, to bust myths. The myth is that the income tax officer can compute your total income under section 143(1), make adjustments like, for example, disallow certain expenses that you may have claimed or disallow certain income tax deductions without informing you. Well, that's the big myth buster. The IT officer cannot make any adjustments at all without priorly intimating the assessee. You, the assessee, should be given a fair chance to represent yourself before the income tax officer, to defend any expenses that you may have made, to put forward a fair argument as to why you may have claimed certain expenses, and only then can the income tax officer come to a conclusion. But he must intimate you either by writing or in electronic mode, and your reply must be considered before making any adjustments. This is your right, and do not accept it if the ITO just simply gives you your computed income after making adjustments and you have not received any prior intimation of this. All right, well, this was of course the end of topic 1, which was of course inundated with a lot of disruptions. But here is a very interesting topic that we have decided to bring on board. Bank Bazaar has released their Aspiration Index for 2019. This is the second Aspiration Index that they have received after 2018. And this time around, instead of just simply taking millennials, they have decided to bring on board young working professionals, roughly in the age gap of between 22 years old, who have just right now got their job, to all the way to 45 years old, who may be well in an advanced level of their jobs, and of course maybe having their own families. And there are some very interesting findings, some of them good for their financial health, some not so. So let's discuss the findings then and the spending trends of the young working professionals with Aparna Mahesh of Bank Bazaar. Aparna, thank you then for joining in on the Money Show. Let's first start off by talking about some of the most interesting findings of this report.
Sure. So before thank you for having us on the show. Before I get into the findings, it's important that I emphasize what this index actually entails. So it's a comprehensive index. I think you've covered the audience and you know who we took the study to. But this study basically covers three facets of aspirations, which is the importance of a life goal, their confidence with regards to how confident they think they are in terms of being able to achieve it, and their current state of readiness. So it's a little bit about their dreams. Do they believe it will become a reality, and where do things stand today? So that's really the three pillars of the aspiration index. So with that in mind, there were some very, very interesting things that came to the fore. I'm going to give you the top 5 findings, and of course, the entire report is available on our site. Overall aspiration index for India is very high. It's at about 86.9. That's an index. What does that mean? You get to that sort of a number when clearly people have high aspirations. They somewhere are confident in their ability to achieve those life goals. And they also believe that today, as things stand where they are, their current state of readiness allows them to believe that these life goals are within their reach. So 86.9, it's a very, very healthy score for as far as India's aspirations go. Point number 2, very interesting, because last year when we did the first version of the aspiration index, wealth was by far the winner, right? It was a clear first. This year it's actually health. Health is super important, followed by relationships and wealth, which come in, closely behind. So that's an important trend, change in the trend that we saw. The third thing, again, very important, but I'm sure it doesn't come as a surprise to anyone, is the fact that non-metros have just about edged out the metros when it comes to the aspiration index. So they have a slightly higher aspiration index. This was not what we saw last year. In fact, the 2 top cities that have emerged out of the 12 cities that we've taken the study to are Bhubaneswar and Indore, and Hyderabad is also tied at number 2. So non-metros, very, very important. The interesting thing in terms of regions is that East India, which includes cities like Kolkata and Bhubaneswar, seems to be higher on the aspiration index, followed South, the West, and then finally the North. Last year, South was on top. Coming to women, very, very interesting. So women are almost on par with men when it comes to the aspiration index. But the interesting thing is that they show extremes. So when you're looking at women in the age groups of 35 to 45, their aspiration index is significantly higher than the overall score for males. And if you look at the younger women who just entered the workforce in the age group of 22 to 27, it's significantly lower. And that's where I think overall at an average level, women tend to be a little lower than men. But this is the kind of shift that we see. I think what we are also seeing is as people age, their aspiration index seems to be improving or increasing. So, you briefly touched upon the 3 groups. We've named them the early jobbers, the money mooners. These are the guys who are in the age group of 28 to 35.
Aparna, you've already given me some very interesting findings, and I want to take them one by one. I'm very happy to know that young professionals are focusing on their health. So that's, I think, a big positive, because health is wealth, and what's the point of earning all that money if you're not going to keep healthy? So that's very important, and I'm happy to know that our young working professionals are putting that right at the top. But you briefly alluded to savings, and the finding was that the younger the working professional is, the more they tend to save, almost 40% of their income, whereas a 35 to 45-year-old is able to save only 37%. But do you think that this has more to do with the fact that when you're 35 and 45, your responsibilities obviously are higher, and hence you are not able to save as much as perhaps you would like to? Or is it simply because their attitude towards saving changes, and hence they perhaps save a little lesser?
No, I think I'd agree with your hypothesis, which is, for instance, education comes up top as a significant chunk of expenses for the money mooners as well as the wealth warriors. So as you rightly said, as you get older, there are more commitments. Your family is there. The avenues or your ability to save obviously goes down. But that said, I'm going to quickly touch upon the fact that what we've noticed across the study is that the debt seems to be well under control for all of these groups. While the savings are definitely high, what we're seeing is that a significant chunk of the population, more than 80% of them, are only spending about 30% of their income servicing their debt. So that's broadly the trends that we're seeing when it comes to savings as well as debt.
And I'm particularly pleased to know that as well, despite the easy availability of debt, via various online channels, P2P lending, and you get a loan even if your credit score is not that great. Still, it's interesting to know that only 80%, almost 80%, that's a major chunk, spend less than 1/3 of their annual income, on EMI. So does that mean that, your new working age professional is not very willing to take on debt? Whereas, of course, globally, the trend is very simple, student loans, home loans, you're just practically living off your future income. So do you believe that that concept of as much as possible staying away from debt is still very much imbibed in your young working professional?
I wouldn't quite put it that way, because what we've seen is that 93% of this population that we've reached out to have some form of debt or the other. You can also, I think, there definitely is they're splurging, they want to buy things, but at the same time, there seems to be an element of prudence that we are noticing across all the age groups, where doing things the smart way seems to be more important than going all out. So they definitely are not going to break the bank for purchases that they may want to have, or any of their, the dream car, etc. But I don't think they're shying away from debt. No, that's not the reading that we would get from this study.
Still not completely shying away from debt, as per the Bank Bazaar Aspirational Index. Another point I want to bring forward is consumerism. You mentioned the aspirational index is increasing as the person ages. Do you think that, to put it very bluntly, do you think that us young working professionals are spendthrifts, basically, Aparna?
So it's an interesting one. There's a bit of a dichotomy here. What we are seeing is, in professionals under the age of 35, image is a very important thing, right? Especially for the early jobbers, it's right up top. Now, when you're talking about image, it includes things like always being up to date with gadgets, fashion, or having a premium car, right? So that clearly is important for them. But on the other side, what we're also seeing is that buying the most expensive thing is not necessarily what they're after. So it's not blind consumerism, and that it's a smarter way of attaining some of the things that they hold important and believe are important for them. So I would say consumerism is alive. It's thriving, but I think there's a good measure of prudence that's been thrown in as well.
Okay. Aparna, the other very interesting point is with respect to retirement. Obviously, the older you get, the more keenly will you be planning for your retirement. But I read your report, and it mentions that most of them have started planning for their retirement at the age of 29. That's a very high level of responsibility kicking in at that age, Aparna.
That's true. I definitely want to add a caveat there. I think a lot of them start saving actively at the age of 28 to 29. But retirement is not necessarily something that the early jobbers are very obsessed with. But what we are seeing is once a person is in his 30s, right? He's very actively thinking about retirement. So that definitely comes into mind when you're looking at people who move into, as I said, the 30s, the money mooners and the wealth warriors that we have in our study.
Okay, all right. And Aparna, finally, it's also interesting to note that they have their corpus as well ready, 1 to 2 crore rupees. However, I must ask you, do you think that they are undermining the amount that they will need when they retire?
Probably. I have no doubts about that. I think, this is a bit of a guesstimate. Bear in mind, most of these people, I mean, the audience is under the age of 45, 44. A bulk of them are under the age of 35. And so this is probably a guesstimate that they have in their minds, in terms of what is it that they would need to save before they can think about hanging up their boots.
Okay, in fact, speaking of retirement, we have a very special show as well planned tomorrow. We are going to be talking about early retirement. And in fact, we have one gentleman with us who has retired early. So we are going to get to know how he did so. But on that note, thanks Aparna for joining in and sharing with us what are the key findings then of the all-important Bank Bazaar Aspirational Index, essentially talking about the spending, saving habits and also the financial planning habits of young working professionals between the age of 22 to 45. All right, well, like I said, tomorrow, that's the 31st of July, we are going to be talking about retirement. Stay tuned for that, and thank you for watching this episode of The Money Show.